The S&P 500 monthly bull calendar, major 2008, testing these levels that we talked about. We talk about 1440 was our upside, 1442 on the S&P. This is that monthly level that they decided to go up here. And I will just caution everyone, even though that we're going to hit the upper end of the target before we do have a pullback that we are talking about that will come sometime in September, there will be a overbought process that will have a pullback phase. So what we are telling people is that we are hitting our major resistance levels on the S&P. 1435. On the monthly recorded high right now, we have 1437.39. When we were back over here updating about how September may or may not go with stimuluses and what's going on around the world, is that the upside target could come into play or the reversal to the pullback could come into play. But one of them are going to come into play, and we are getting this side of the market going up to our target area. That is a major target area of around 1440, 1442 on the S&P. We have set it for a number of months. This is going to be the major monthly reversal bar where the financial crisis started back in 2008. What that means is it's taken 4 years and some change to get back to these levels where the financial crisis started. What we do here, and short-term transactions only in one area of the market, is knowing when to sell into these major resistance levels, because you let those long positions run into those levels and then it's time to get off board. Now, for a longer term level, we are overbought, so there's still going to be some cautionary, as I said over the weekend and last week, is that the upside target could come into play. This is the time of year where that continuation from the August trade carry over. We had ECB, we had everything that could drive it higher. But now that we're hitting up here, this is going to be a challenging area for the market where it's taken 4 years to get back here. So the longer that it took to get the S&P 500 back here to this wall of resistance, we're going to really be focusing on this 1440, and this is short term. And when you hit the upper end of the target, you always take the upper end of the target and you say, okay, we've had a great run on that S&P. Now the S&P would need to pull back from multi-year challenges that it's going to have here at those prices. The next level, if we can break above my 1442, there's a major wall right up in here in 2007. And the top of this downside bar, and that's around 14, let's just call it 1460 on the S&P. Now remember, we're going into the calendar month in a very overbought process and the starting part of September in the S&P on a very short-term level from its bull rally. So the bull rally at some point when it hits our upper price targets, that's where it's going to get more exhausted. This is where you would start looking for corrections to happen. And what do I mean by that? That every bull, and we have a bull here, but the bull would pull back as it did in the calendar year. Like the bull was really good here. See how the bull came down? But what I am saying is the bull will have to address its overbought area in the S&P. The higher it goes, the more that we'll be looking at 1440 puts short term on the S&P 500. So when the S&P 500 works its overbought bull level price levels, meaning what do I mean? It works it off. It has to come down to work that off. That's what bulls do. They make their highs. They go back to the major. It took them 4 years to get this here. 4 years. That's a long time for the S&P to get back there from where the financial crisis started. What we look at is there going to be a new bull born or not? That would be down the road still. We would have to clear out the election process. We would have to clear out and start next year. We would have to have some monthly consolidations to even get in the fact, are we going to say that we have a brand new bull in? Meaning that, yeah, we have the beginning of one here, and we've made the higher highs, and it's taken a number of years to test these 2008 levels where the financial crisis and the S&P and everything just got mutilated. But markets have been resilient. They've been pumping them higher. Never fight the trend. Let it keep going up to resistance level. I would say that from the bull rally, that we would have to pull back. We would have to consolidate, then take run higher and get up above these trend lines, meaning that to get to 1500 on the S&P, we're going to have to consolidate above 1445 on a closing level and build a base on a closing level above 1445 to reach the upper end of the price target, which is in the cards. But most of our price targets were for year end. If the bear was going to be broke, then the bear would have to be broke, and there's going to have to be earnings, and there's going to have to be lots of things. So this is the beginning of it. But you have to fade back and then make higher highs. Because what goes up parabolically in a very short time frame in 4 months without any real consolidation is that you pull back. You got to consolidate markets so that the bull strength builds on a consolidation in price. So short term, be very cautious right around 1440, 1442 on the S&P. 4.5-year bull rally highs. Back to the financial crisis, testing resistance levels on all cylinders, and this is where the market is going to get very challenging in the very shorter term.